be won. Paradise must be won each day and each night. Through darkness and through light, cry it out to the world. Spread the word.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي نحمده ونصلي على رسوله الكريم وما بعد Assalamu alaikum wa rahmatullahi wa barakatuhu. Dear brothers and sisters, we continue with our discussion on differences between Islamic banks and conventional banks. And in the last episode, we discussed in detail as to how the profit distribution between the shareholders and the depositors take place. And now in this episode, we will go further deep and we'll see how the distribution amongst the depositors itself takes place in an Islamic bank. And in this connection, I would like to also remind you that the depositors, this is a refresher, the depositors of an Islamic bank are investing their equity. And having invested their equity, they are entitled to the profit generated by the common pool, which is a pool where all the depositors' money is kept and then from where the investment takes place. In the conventional bank, because the depositors are not investing their equity, they are loaning the money and receiving a fixed interest rate, and upon maturity of the deposit, they are getting their principal plus interest. They are not entitled to share the bank's profit. So if a conventional bank gets the funds from a depositor at a small rate, but invest in and you know the investment avenues that a conventional bank has, usually in the retail banking side, they get a huge upside, especially when they invest or when they lend on the credit cards, for example, which is the world's most expensive credit. And apart from that, they do personal loans at a high rate. And then they do car loans, for example, and goods loans and the others. And when it comes to corporates, they are charging lower rates. But the retail consumer side, and the consumer banking side, they are really taking very high interest rates. So because the deposits, which are basically deposited by the depositors at a lower interest rate, but they get only that fixed interest rate, the conventional bank keeps most of the interest earnings for the shareholders and also the employees. In this case, when it comes to Islamic banks, the Islamic banks, I have explained in the earlier episode to how the profit is being distributed between the conventional and the Islamic banks. Now let us see how the profit is further distributed between the depositors. If some depositors deposit money with the Islamic bank for 3 months, for example, and some others deposit for 6 months, and then there are others who deposit for 9 months, and there is another set of depositors which come for a 1-year deposit, and then more than 1 year also, different categories of deposits. I'm talking about the investment deposits. Because there are 3 types of deposits which come to the Islamic bank. One is the current account deposits. The current account deposits are actually a loan on the bank. It is qard, or the loan on the bank. The current account depositors don't get anything. It's same like conventional bank, where conventional banks, current account holders don't get anything. The saving account and the investment deposit account, these two are the profit generating accounts for a depositor. Now look at the Sharia wisdom. The Sharia does not approve combining the return and guarantee together. Now what does that mean? It means that if an Islamic bank is giving a return on a deposit, which is basically common pool deposit, a mudarba deposit, there is no guarantee. And where there is a current account, which is qard or loan on the Islamic bank, there is a guarantee, but there is no return. It means you cannot combine in Sharia the guarantee and return together, like in conventional bank. In a conventional bank, the depositor is depositing the money, getting the return, and also getting the guarantee. So it is combined both. In Islamic bank, either you guarantee or you give return, but you cannot combine both. In current account, it is a loan, Qard Hasan, or loan, interest-free loan, or a cost-free loan, or call it profit-free loan on the bank. So the bank's shareholders actually are borrowing the money from the current account holders, and they're bound to return it to them. So they're guaranteed the senior debt, but there is no interest. When it comes to the saving account deposits and the investment deposit account deposits, in that case, there is a return, but there is no guarantee because it's an equity, and equity cannot be guaranteed, as you know. The distribution of the profit is made for the saving account holders and for the investment deposit account holders. For the saving account holders, generally the Islamic banks have a model which most of them use, is that they take the lowest balance during the month. It's a monthly rollover mudarba, in a sense that the mudarba capital from the depositor of the saving account will be considered the lowest in a month, from the first till the end of the month, whatever has been the lowest balance, because the saving account balance may fluctuate. The depositor may need to draw funds and then would like to bring the excess liquidity back and then draw, and then it is a fluctuating. They try to put some restrictions because they would like to discourage the saving account holders from taking away the money, and they say, okay, if you draw more than 3 times, for example, then you will not be entitled for mudarba. The account will not be considered part of the mudarba, and as such, you will not be entitled for the return. This is fine. There is no Sharia issue in that, because Islamic bank would like to ensure that if you have opened a saving account which is part of the mudarba, you should leave the funds with me so that I can invest. If you are withdrawing the funds, then it means you're not giving me an opportunity as a mudarib to invest your funds and to get you the return. So the lowest balance in the saving account will be considered as part of the mudarba by an Islamic bank. And if some Islamic bank has set some threshold, they say in a saving account, if the balance goes below $5,000 US, for example, this will not be considered part of the mudarba. So the depositor or the customer, when he's signing the saving account opening form, which is basically the mudarba contract between the depositor and the Islamic bank, will read through the terms and conditions. There is no fine print. It's all there above the table. And he will be made aware of this condition that you are not supposed to go down below this level during the month, number one. Number two, you will not withdraw more than 3 times. If he follows those instructions and if he respects the agreement which has been signed between the Islamic bank and the depositor, saving account holder, then the account will remain part of the mudarba and he will be entitled to get the mudarba return. But if he breaches any of the terms, then obviously it will not be part of the mudarba. Come to the investment deposit account, which is called the fixed deposit account or term deposit account in the conventional. Here it is called the investment deposit account because the investment is being made by the depositor with the Islamic bank, who will in turn reinvest these funds to get the return, and then this will be distributed. So here we have got different category of deposits: 3 months, 6 months, 9 months, and 1 year, and maybe more than 1 year. Now, how justice is being done between a depositor of a 3-month and a depositor of 1 year or more than 1 year? Definitely there needs to be some justice. It is not possible that a depositor who is leaving funds with you for over 1 year should be treated same way as a depositor who is leaving only for a shorter period of time, say for example 3 months or 1 month. There are some parameters that the Islamic banks follow which actually do justice between them also. And that actually is the tool of weightages. The weightages are applied on different deposits, and this tool is very effectively utilized. And there are very sophisticated softwares developed by the Islamic banks who take care of these weightages of this tool of justice between the depositors also in a very effective manner. For example, If a depositor has brought 100,000 US dollars to an Islamic bank and would like to leave it for 3 months, and another depositor also brings 100,000 US dollars and would like to leave it for 1 year, for example, or let us start with 6 months, and then another depositor 100,000 US dollars bringing for 9 months, and another depositor 100,000 US dollars bringing for 1 year, and the fifth one also 100,000 US dollars bringing for more than 1 year. So there are 5 different depositors, different periods. So accordingly, the weightages are applied. What is the concept of the weightages? The concept of the weightages is that if a depositor brings a deposit for 3 months, normally the transaction, the cycle of the transaction is such that it may not be possible for an Islamic bank to invest that 100,000 US dollars and also come out with profit within 3 months and be ready to return the deposit to the depositor. So in this case, the Islamic bank applies the weightages. It means that I will use 50,000 US dollars, for example, could be higher also. A 50% weightage means that I will use, Islamic banker is saying to the depositor, I'll use 50,000 US dollars from this 100,000 US dollars into the common pool, and you will be entitled to get the return on 50,000 US dollars because you're leaving funds with me only for a short period of time. So 3 months will get completed very soon, then you will be coming to collect the money, and I will have 50,000 readily available. I will collect another 50,000 from somewhere, maybe from my own pocket. I will give you, and I will make 100,000 plus your profit on 50,000, and I'll give it to you. This is weightages, notional weightages, which are being used. We'll take a short break and come back soon. Please stay with us.
Spread the word of Islam.
Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome back. Now come to the 6-month deposit. A 6-month deposit will have a higher weightage. Maybe he will have weightage of 60%. 9-month depositor, maybe he will have 70%. 1-year depositor, maybe 80%. More than 1-year depositor, maybe 90% or 100%. So these weightages are commonly applied by the Islamic bank to have justice prevail amongst the depositors as well. So obviously, if you are leaving funds with me for more than 3 months, your return will be higher because a higher amount of money has been invested from your 100,000 US dollars into the common pool, and you are as a result getting higher return. So what will happen? And then there are another aspect, which is that do you want, if you have left your money with me for 1 year, do you want that I should keep on paying you on a quarterly basis as and when I close my balance sheet? Or do you want that I will keep on rolling your profit also over along with your principal, along with your equity? In that case, the chances are that you will get more return. So it is up to you that if you leave your funds with an Islamic bank straight away for 1 year in order to get higher weightage and in order to get higher return. So if you do that, there is the possibility that you will get higher return compared to if you keep it only for 3 months on a rollover basis. There is no injustice if you need funds, although you have kept it for 1 year and 6 months have passed, but you need the funds now. When you go to the Islamic bank and you will say, well, I would like to terminate the Mudarba contract because I need funds. Islamic bank will treat you justly there as well. How justly you will be dealt with? If you have deposited your funds with an Islamic bank for a longer period, say 1 year, and 6 months have passed, and you need money, if you go to an Islamic bank and request the Islamic bank that you would like to terminate the Mudarba contract because you are in need of funds, if you do the same thing with the conventional bank, they will apply a premature encashment penalty, or they bring down your return in a manner that you hardly get anything. But when you go to the Islamic bank will say, okay, we accepted this Mudarba for 1 year, and we have invested your funds through the common pool mixed with the other depositors' funds. But if you need money, we are ready to break the Mudarba contract prematurely. In this case, we will treat, if the 6 months have passed and you are in 7 months, in this case, we will treat your deposit as if originally it was for 6 months. And the 6-month weightage will be applied. So you will not be losing anything. You are continuing with an Islamic bank and 6 months have passed. And although the deposit was for 1 year, but you would like to encash it and you have successfully passed 6 months. So Islamic Bank will apply the 6-month weightage. It will not apply 1 year weightage, but it will not apply a 3-month weightage or not give you anything. It will apply a weightage which will actually be justified. And this is another way the Islamic banks are more fair. In fact, they are fair to the depositors than the conventional banks. Suppose that you have kept your funds with an Islamic bank for 1 year and you will not be able to complete the Mudarba period. So you come to the Islamic bank upon completion of 6 months and say, well, I would like to encash my deposit because I need money. The Islamic bank will treat you in a manner which is just, which is fair, which is that Islamic bank will say, okay, you left your money with us for 1 year. So in our system, we allocated to you a 1-year deposit classification, and accordingly you are entitled for a 1-year weightage. But since you are taking away your funds by terminating the Mudarba contract, in half the time, we'll give you the weightage which is applicable to 6-month deposit. So as if from the beginning, you kept the deposit with us for 6 months. Accordingly, he will be given the weightage for 6 months. It is contrary to the conventional bank's practice, whereby if you go for premature encashment to a conventional bank, they will not only charge you they will give you a lower profit interest rate, but also they will charge you some certain premature encashment penalty. So at the end of the day, you get nothing, almost non-existent, peanuts. So here there is another difference which is coming out very clearly, that Islamic banks are treating their depositors in a fair manner. We have discussed about the distribution between the depositors and the shareholders, but one thing which I need to discuss with you is how this distribution ratio is determined. The distribution ratio between the Islamic bank and the depositors is determined on the following level. First of all, the Islamic bank as a mudarib, it means that the Islamic bank is the fund manager. And when you entered into a mudarba contract with the Islamic bank became the mudarib with the share in the profit which the common pool will generate, with the mudarba will generate. The mudarba, as we will learn in our following episodes, mudarba is a fund management contract, which is actually the sharing in profit. Sharing in profit in a sense that one party has got wealth, the other party has expertise, because Allah subhanahu wa ta'ala created us, and Allah subhanahu wa ta'ala has done justice to all of us in a way that to some people Allah subhanahu wa ta'ala has given money, to some people Allah subhanahu wa ta'ala has given wisdom, expertise. So some people who have got money and they don't know how to do business, how to put their money to work, because in Sharia, the money, you cannot make money out of money, you have to put the money to use to be able to get some profit out of that, and that is halal. So the mudarba is the sharing in profit. In this case, the mudarib has got the expertise, and the fund provider is basically contributing the capital. So Allah has been kind to all. To some people He has given money, and to some people He has given expertise. So this is the marriage of wealth and expertise, mudarba. So the mudarib, i.e. the Islamic bank, will use their expertise to generate profit for the common pool, which will be distributed between the depositors and the shareholders. The shareholders or the mudarib will take away a certain percentage of the mudarba profit. Now from that percentage of the profit, the mudarib will meet with all the running expenses of the bank. The Islamic bank, being the mudarib, will be entitled to share the mudarba profit. For example, 50-50. So from the 50% of the mudarib's share of the profit, the mudarib, i.e. the Islamic bank, will meet with all its running expenses. And for the depositors, their gross profit will be their net profit. They will not have to bear any expenses to run the Islamic bank. This is one model that the Islamic banks commonly practice. There is another model. And the model is that all the expenses of the Islamic bank are debited to the common pool, and then whatever is the bottom line, the net profit is distributed between the depositors and the shareholders, or the Mudarib or the Islamic bank. In this case, obviously, the profit distribution will not be 50-50, because all the expenses have already been debited to the Mudarba, will not have to meet with any other expenses. So it means that the share of the Mudarib may be, for example, 20%, and then the share of the Rabbal Mal will be 80%. There are different models in the Islamic banks, which both are Sharia compliant and both are okay from Sharia perspective. But mostly, the Islamic banks now are following the model whereby they take, for example, 50% of the profit share of the Mudarba pool, and then from that 50%, they meet with all their running expenses. So the depositors don't have to actually bear any of the running expenses of the Islamic bank. So their gross profit is their net profit. So here, the fairness, that if you encash your deposit prematurely, you will be given a lower weightage. It means as if you started from the very beginning for a lower period. So you will not be taken away, the Islamic bank will not take away a good chunk of your entitlement or your profit on the pretext of the premature encashment. So these are the niceties of the Islamic bank. Let us wrap up this episode. At this end, when we come back, inshallah, in the next episode, we'll have a peep into how an Islamic bank does the import financing. Till such time, take good care of yourself. Inshallah, we'll continue with our discussion in the next episode as to the differences between the Islamic and conventional banks. Please do join us in the next episode. Thank you very much. Take care of yourself. Assalamu alaikum wa rahmatullahi wa barakatuh.
Spread the word, oh man. Spread the word of Islam. Oh, fortunate one.